IAS 11 divides the construction contract into two. Number one, cases where you will be able to ascertain the end result. Where the outcome is ascertainable, you have to account for the revenue based upon stage of completion. Where the outcome is ascertainable, you are going to follow the stage of completion method. When the contract is at the early stage, where you are not able to ascertain the outcome, when the outcome is not ascertainable, you are not allowed to recognize any profit out of it. You can recognize revenue only to the extent of cost incurred that are recoverable. That means you are not allowed to recognize any profit at this stage, but if you expect any loss, that is if you have incurred a cost that is not recoverable, that means it should be debited to the profit loss account immediately. To the extent of cost incurred that are recoverable. So when the contract is at very initial stages, you are going to follow this method, that is you are going to recognize revenue only to the extent of cost incurred that are recoverable. Now coming back to the stage of completion method, how you are going to account. It does not prescribe any particular method for ascertaining the stage of completion, but it says it includes three methods. Number one, it is based upon cost basis, that is you are going to compare the total cost with the cost incurred to date, then that will be taken as the percentage of work completed. And the second method could be a survey. In case of contracts where a lot of technical issues are involved, you could be appointing a separate surveyor. He will be ascertaining the stage of completion. He will be giving you a certificate as to how much of the work has been completed. The third method is physical completion method. Physically, how much of the work has been completed? For example, you have got a contract to construct 2 buildings and 1 building is over, then you can take it as 50% completed. Same way, if you are going to construct a building where you have got 4 floors, the 2 floors are completed, that is ground and first, then you can take it as 50%, even though the cost of construction for the next 2 floors will be lower than what you have incurred already. So these are the three methods which are given in the standard. It says the methods to calculate the stage of completion could include these three. It doesn't mean that it is restricted to these three. So this is how we are going to calculate the stage of completion. Account called contract account. Simultaneously, you prepare another account called the profit or loss made out of the contract. First, in the profit and loss account, you have to debit total cost. There is a cost to be incurred towards the entire construction, multiplied by the percentage completed. On the right hand side, you are going to recognize the total revenue multiplied by percentage completed. As I told you, the percentage of completion can be ascertained by any method, even though the standard lists 3 methods. It says the methods includes the physical completion method, survey method, or the cost basis. So in the examinations, that particular information will be provided to you as to what is the percentage of work completed. So that should be followed. If no such information is provided, you calculate the cost incurred vis-a-vis the total cost expected for the total contract. You can take it as a percentage of work completed. So that should be used here. Then if you expect any loss or if there is a particular expenditure that is not recoverable, then that is debited to the profit and loss account. So cost incurred that is not recoverable or it could be a loss expected or it could be a penalty. If it is a loss or if you expect a penalty or if you have incurred any expenditure which is not recoverable, then 100% of this amount is debited to the profit and loss account immediately. The balance in this account will tell you how much of profit or loss is going to be taken to the profit and loss account. There is statement of comprehensive income during this year. Now coming back to the contract account, you are going to debit all costs incurred so far. Cost incurred could relate to materials used, or it could be the labor, or it could be the depreciation for the plant or any machinery which is acquired specifically for this purpose. So cost incurred to date, that is the cost of the material used, cost of the labor, depreciation on the plant and machinery used. So it should be debited. You have to take in mind that any material which is wasted or any labor cost during idle period, all this should not be taken into account. Even depreciation should also relate to the period where the construction was going on. If the construction has been suspended for a particular period, then that relevant depreciation or any labor expenditure incurred for that particular period should not be debited to this account. Then here you are going to credit this account with the money received from the client, either it is cash or bank. So money received from the client is credited to this account. Then now you have a debit here, corresponding credit should come in this account, and you have a credit here, there is a revenue that should come as a debit in this account. Now this account is balanced and that represents money due from the contractee or the money due to the customer. So it tells you whether the money is due or by you or it is due to the customer. So this item goes to the balance sheet, that is the statement of financial position. The net result of this item should go to the statement of comprehensive income. So instead of taking the net result, in the examinations you are going to take this item into the cost of sales, because under IFRS we are following the COGS method. So in the statement of comprehensive income, this debit should appear separately under the cost of sales, and this item should appear separately in the under revenue. If any loss is here, then it is taken to the statement of comprehensive income as a separate line item. So this is the accounting treatment for construction contract. So here you are going to debit the profit and loss account with the total cost multiplied by the percentage completed. The percentage completed is ascertained by any of the methods using the physical method, survey method or the cost basis. But in the examination, the particular information will be provided to you. If it is not available, you have to calculate the percentage of completion based upon the total cost expected for the construction compared with the cost incurred so far. That will give you the percentage of completed. So that should be calculated. In respect of revenue, in case of fixed price contracts, if there is a bonus element, assuming there is a bonus element, it should be taken into account only if it is highly probable that you will be able to claim that particular bonus. Only when it is receivable, when you are very confident that you are going to receive it, then only you have to take that bonus into account. Otherwise, it will be only a contingent asset that will not come in the picture at all. But here, if there is a penalty element, if you are very confident, or if you are very confident that you will be able to escape that penalty, there are no issues. But if you feel that you may have to pay the penalty, then you create a contingent liability and you have to provide a separate note. But if the penalty is certain, then that will appear in the profit and loss account as a separate debit item. So also any specific loss incurred or any cost incurred which is not recoverable, then in that case that will be debited to the profit and loss account. There is no corresponding entry relating to this that will appear in the contract account. So in the contract account you are going to debit cost incurred, that is material used so far. You have to be careful that wastage of material, any normal cost is not going to be included. Then labor cost should be included. You have to be careful that idle period labor cost is not to be included. Then depreciation on any plant and machinery that is going to be used for the contract that we are going to account for it here. Again here idle period depreciation is not going to be accounted. And one more element, if there is a borrowing cost, that is you have borrowed specifically for this purpose, then the borrowing cost interest can also be included relating to this particular period. So borrowing cost can also be included as a cost. Now, one more issue that you have to be careful in examinations point of view, that is general administrative expenses cannot be debited to the contract account unless that particular contract says it is recoverable from the customer.